There's a prediction for you. 2026 in April, retirees are going to get higher tax returns than normal. They're going to be up. And I want to talk about why they're going to be up for people, what they may need to make sure they do. And I'm also going to talk about why I think if you get a higher tax return in April, it might be a result of poor planning. Speaking of poor planning, I once again invited my co-host Tony to the show. Tony, welcome. We talk about tax returns coming up. We're getting the tax seasons open for 26 or 2025, I should say. And April's coming up. Most people file their tax returns on time, myself not included. I usually do an extension, but I think the tax returns are going to be up this year, particularly for retirees. And have you been hearing this, that potentially higher tax returns? Have you been hearing this, Tony?
You know what? I've heard so many rumblings about government's going to send out checks to people, like dividend checks or refund checks. I don't know. And maybe just add it to your tax refund, so higher refunds. I don't know. I haven't read anything solid from a reliable source, but I've heard rumblings. I've heard people
That's why you're on the show, Tony.
Yeah.
That's why you're on the show, to add this wonderful insight.
Well, I really haven't. I don't know. And you're the tax guy, but it's kind of like the cobbler's kids have no shoes with you. You always file your tax returns late. You admitted it. And there's one of two things. You're cheap, so you want to hang on to your money as long as you can to earn the interest on it before you have to pay it to the government. That's one.
You can stop there.
Number two, number two, we're going to get to number two. You're so busy helping everybody else with their finances. Yours take last priority because you're helping all your clients first, and then you have to delay your taxes so you can focus on that eventually. I know those are the two main reasons, right?
True. So I'm guessing how much, you may not know this. The stats for those watching on YouTube, you could see the IRS.gov. We know it's my favorite website. Here's some statistics, but the average refund last year, 2025, was $3,167.
So why am I paying in then?
So do you get a refund, Tony, or do you have to pay money at the end?
My wife and I always got refunds when the kids were living at home. We always got a refund, and the average would be around that $3,000-$4,000. But since all the kids are moved out, we've had to pay in each year.
I applaud that, Tony, and I'll get to that in a little. I feel a rant coming on, but. Mm-hmm. So that is from last year. I think it's going to be higher. I think the average refunds are going to be higher in 2026, significantly. Now, I want to talk specifically about retirees because I think they're going to get some extra income coming through the form of tax returns. By the way, of the people that file a tax return, about a little more than 60% actually get money back. So I'm in the minority in that, and you're in the minority now, where we owe money. But
you and I don't cheat we don't cheat on our taxes, so that's probably part of it. We're honest. We're two of the only honest people left when it comes to taxes.
Well, I think what's going to be happening and why I'm predicting an increase in refunds for seniors or retirees is due to the One Big Beautiful Bill Act. OBA. It's like ABBA, the group. No, there's 3 B's in there. OBA. Yeah, and so there's a reason I have it that way, and what I want to do is break it down.
Let's break it down so everyone can understand.
Okay. So the main.
Hey, I'm wearing that same shirt today, by the way.
Did you wash it? I touched it, so you're like, I'm not washing this. The senior bonus deduction. You remember this in the One Big Beautiful Bill?
Oh yeah, awesome.
Everyone remembers this, especially if you're 65 plus, because if you're 65 years or older, you're getting a $6,000 bonus deduction off on your taxes. And this is for years 25 through 2028, which means people filing their taxes now for 2025 in early 26 have already gotten that $6,000 bonus, 12,000 if you're married.
Yeah, 12,000 for married couples who are over 65. Dan, I did the math. I added it all up. The new standard deduction, the standard deduction for those over 65, plus the bonus 6,000 per person on top of it. If you're a married couple over 65, that's over $45,000 for a standard deduction.
Exactly. And that means that first $45,000 you don't pay tax on.
Right.
Right? Now, at the beginning of 2025, people didn't realize that this was going to happen. No one did, right? They didn't think that they were going to get this $6,000 or $12,000 extra deduction. So they planned their taxes accordingly. And this one big beautiful bill didn't come in through mid-year.
Right.
So did the companies adjust the tax withholdings? Did the IRS adjust the tax withholding tables for people's paychecks? Now, not a lot of people over 65 are working relative to under 65.
Sure.
And there are other, we did a show on how the health savings accounts are going to be 2026 is the year of the health savings account. Watch that. That doesn't apply to this because if you're 65 and you're on Medicare, you can't get an HSA. So, but this show is about you, why this bonus deduction is going to be a bit of a surprise for people. Now, it shouldn't be a surprise, but I'm going to guess that most people did not adjust their taxes that amount withheld in 2025 due to this mid-year switch. And that's why they're going to get extra bonus rebate or refund.
Because of the increase the amounts for the standard deduction across the board, they went up plus the bonus deduction. That's why you're saying people will get more.
Yes, they had the general increase across the board for the standard deduction due to the inflationary numbers, and then this extra bonus, which a lot of people didn't plan for. Now, we've done shows on, hey, this is a perfect opportunity to do some things.
Yeah.
But most people did not. And now there is a phase out on that, Tony. So not everyone that's over 65 is going to get this $6,000 bonus deduction. Single filers under 75,000 of modified adjusted gross income will get it. 150 for couples. And then once you're past that, the deduction decreases by 6 cents of every dollar you make above it. So 6% decrease in that bonus deduction for every dollar you make above. So that phases out 250,000 roughly. So a lot of people are going to get this. A lot of people are going to get this bonus deduction. And so I'm guessing that if you didn't do anything differently, if you do your taxes every year and didn't change anything, there's a reasonable chance that you're going to get $720 extra in your tax refund this year for 2025. And how I calculated that, Tony, I know you hate math. If you're getting a $6,000 bonus deduction and you're in the 12% tax bracket, which many of my listeners are in that 12% range, if you're in that 12% range, you're falling within that senior bonus deduction range, meaning you're getting the full 6,000. 12% of 6,000 is $720. So if you didn't adjust and withhold less from your taxes if you file quarterly, or if you get Social Security, you could change the amount that's withheld for taxes, pension, any sort of income you can withhold. If you take an IRA distribution, you could say withhold 10%, withhold 20%. And a lot of people withhold more than they need to because they like to get an extra little chunk of change from the government later.
Which you don't agree with, I know.
I know you do. I'm going to rant soon. I will rant on that. I'm just giving you a warning. You may want to hide the children. One thing that I'm thinking that people should have done if they listen to our past shows, and if they've heard me talk about this, is that a Roth may have been the thing to do. So if you don't pay taxes or say, oh, I don't pay taxes, this doesn't help me, my bonus deduction doesn't apply because I'm not paying taxes anyway. So am I going to get $720 just because can I stack, the bonus deduction is stackable, Tony. Like you said, it goes on top of the standard deduction. You don't have to itemize, you get this. But if you have a negative tax rate, you don't get a chunk of money from the government. This bonus deduction is not like, oh, you don't pay taxes and now you're getting an extra $6,000. No, you don't get a check.
Right.
So what do? Well, hey, Dan, I don't pay taxes. I'm already below the threshold. I don't pay taxes on Social Security. I don't make a lot. Maybe you could take some 6,000, say, from your IRA and make it a Roth. Pay the taxes of 0 or even 10%, 12%, not a bad rate, and then throw it into a Roth. Now you got tax-free money for the rest of your life and your next generation, potentially. So that's just one little thing people could have done for 2025. But if they missed it because they didn't realize they were getting 6,000 last year, they could do it this year. So it's time to start tax planning. So bottom line, in April, Tony, the retirees that didn't adjust how much they were paying into taxes overpaid last year.
Yeah.
And you know how I feel about
that. Well, what's wrong with overpaying? What's wrong with, hey, I'm going to get this nice chunk? A lot of people, like you said, we use that money and we go on a little vacation, or we use that money to pay off a credit card each year.
Let's prepare for another of Dan's rants.
People that do that, okay, I get it, Tony. Okay, so you're saving. There are other ways to save, right? Now you might say, I can't save. If I put money in my checking, my wife and I are going to spend it. So we'll never go on that cruise. So what you're fundamentally doing is you're giving money, your money, you're giving it to the government to hold on to you so they can give it back to you with 0 interest, I might add. There's no little, you don't even get a certificate.
They're earning interest on that money.
They're earning interest. They're spending on who knows what, especially up in Minnesota, Tony. So what are you doing giving your extra money to the government for them to give it back to you for free, no interest earned? Why not put it in the bank, make something, So you have to be more
high
strategic
yield
about
savings
it.
account or something.
High yield savings, right? You get $3,000 back. What's wrong with getting an extra $50 for the year?
Put it in a short-term MIGA or CD or something.
CD, or just not give it to the government.
Yeah.
Right? Budget better. So I don't like that. And here's another thing, Tony. Now I just thought of it now, and now that I'm upset, this one really bothers me. I see politicians, President Trump, high-level officials, politicians at all levels of our government saying no taxes on Social Security anymore. But that's false.
Yeah, it's a lie.
Nothing has changed on the taxation of Social Security in this country.
Nothing.
What they're saying is that this senior bonus deduction, which we've been talking about today, is going to reduce or eliminate taxes on Social Security for a lot of people. Yes.
Well, it's bumping them out of the income level. That extra $6,000 deduction will bump them down, so their Social Security isn't then eligible because you have to make so much before it starts being taxed. So they've bumped a ton of people out of that category where their Social Security will be taxed, but they didn't change any of the tax laws regarding Social Security. Up to 85% of your Social Security can still be taxed depending on your income.
Right. And so the stats that they say, President Trump will be like, no more tax on Social Security. I think the Treasury Secretary said it. That's just false. Social Security is still taxed. The only difference is the standard deduction is now up for people over 65. And so theoretically their taxable income goes down, and maybe they don't pay Social Security tax on Social Security. But then what if you do a Roth conversion, or you take more out of your IRA, and boom, now all right, I'm going to stop there on that, because I think the lesson here, Tony, is the One Big Beautiful Bill offers this bonus deduction to a lot of people over 65. It does not eliminate taxes on Social Security. Get that out of your head. It gives you a more of a standard deduction, and it's a short-term thing. So you have to be proactive about it. If you just don't do anything, keep giving the government your money and get less in your paycheck, Social Security check, whatever, and then get a refund at the end, you've effectively done nothing and given the government a loan.
Yeah.
But if you adjust your withholdings to reflect the new reality, which is your taxes are going down, and then you wound up paying $50 at the end of the year to do your taxes and you owe $50, I'd rather you do that, because what that means is throughout the rest of the year, you are making more money to pay off debt, give to your grandkids, send to your favorite co-host on podcasting, So I think this idea of overpaying throughout the year needs to stop. Now, you don't want to underpay because there's penalties for that. And I get the whole thing you were saying, Tony.
Mm-hmm.
You'd like to have a nice refund check because it's considered a treat.
Well, some people do, yeah. I'd rather hit zero. I don't want to owe, and I don't want to necessarily get anything back. That's my
Did I just hear you say you don't want to have any taxes? You think taxes should be eliminated? Is that what you just said? You don't want to owe taxes? You don't think anyone should owe taxes?
No,
because I'm with you, Tony. I'll grab the pitchfork.
No. I think we need to pay our fair share, but no more than that. And I don't want to owe at the end of the year.
Neither do I. So yes, I do delay. I file extensions, but I always pay on time, and my extensions are done. I always pay at least the safe harbor rule, 110% or whatever of what I paid the previous year, so that I don't get afoul of any IRS penalties. Yeah. But it takes me time to figure this out because I'm planning. I'm always planning. And you're right, Tony. I'm always planning for my clients. So if you aren't planning, 2026, 2025, I'll give you a redo. Not many people adjusted because they didn't realize that the bonus deduction for seniors was last year, 2025.
Right.
Now, here for the next few years. So get on it. Figure it out. Could you be doing Roth conversions? Could you be spending more, taking more out of your IRA and spending it at a low tax rate? Should you adjust the amount that you pay in taxes on your Social Security check? All legitimate questions that you can decide now. Don't wait until April of next year to go through the same process again. Do it now. It's January. It's February of 2026. You still have a full year where you're going to overpay the government, or you're going to pay just the right amount. That's the question. That's the conclusion, Tony. So I'm off the rant. I think we're going to call this show. Tony, thanks for another good show. And I guess we'll just catch everyone next week.
All right.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.